Hi, this is Lara at Elliott Wave Gold with an extra video update for you after the session has closed in New York for the Wednesday the 4th of October. Assume the trend remains down while price remains below 1289.67. If we get a new high above that point, which was the high for the 2nd of October, by any amount at any time frame, that'll indicate some more upward movement. This is actually my preferred scenario, and at that stage I'd be expecting a bounce to continue up to about 1330 to 1334. After that, my preferred scenario would see a trend change or an end of the bounce and a resumption of the current downward trend. At the weekly chart level, I have two scenarios. I'm going to go through the Elliott wave analysis first, and I have two wave counts, and then I'm going to look at weekly and daily charts for classic analysis and see which of these scenarios has more support from classic analysis. This is the first wave count. The first Elliott wave count sees cycle wave B unfolding as a double zigzag. The first zigzag in this double is labelled primary wave W. The double is joined by a 3 in the opposite direction labelled X, which subdivides as a zigzag, which is the most common structure for X waves. And here we have the beginning of the second zigzag in the double, subdividing 5, 3, 5. There are a couple of problems with this wave count though at the weekly chart level, which do reduce its probability, and so that's why I continue to consider the second wave count. Double zigzags usually have a clear and strong slope against the prior trend. For this one here, the trend down to this low, very obviously from the high in 2011, was down. This is the big low back here in December 2015. Since then we've had some basically sideways movement with a bit of an upwards bias. After this big downward movement, if cycle B is a double zigzag, it should have a strong, sharp upward slope. The second zigzag in a double has a purpose, to deepen the correction when the first zigzag does not move price deep enough. In order to achieve that purpose and a strong slope, the second zigzag normally moves substantially beyond the end of the first, and so that it has a slope and not a sideways look. X waves of double zigzags are usually brief and shallow. Here, primary wave X cannot be described either as brief nor as shallow, so that must reduce the probability of this wave count. Here's a second problem. Intermediate wave B within the possible zigzag of primary Y has to subdivide as a double flat correction. We've got an expanded flat for minor W, an X wave, and a regular flat for minor Y. In my it's over 9 years now, and it'll be getting up to 10 years of daily technical and daily Elliott wave analysis, and for the last few years adding classic analysis to that, I've only seen in hindsight a movement which could definitely have been said to be a double flat. I think they're actually very, very rare structures, probably even rarer than running flats. And so the rarity of this double flat also has to reduce this probability of this wave count. The second wave count at the weekly chart level does have a better look. We'll get to that next. And so intermediate wave C has to be a 5-wave structure. So far, I would not want to label it over here because then primary Y would not have achieved its purpose. It would not have moved beyond the end of W. It's not truncated, that's not the correct term in that situation, but it would have failed completely to achieve its purpose. So I wouldn't want to label that over here. And so intermediate wave C has to be a 5. We've got 1, we're looking for 2, then we'll have 3, 4, 5. 2, as it continues lower, which is possible, can't move beyond the start of 1, below 1205.41. Let's take a look at what's unfolding at the daily chart level from this low down here, which I'm labelling intermediate wave B, this point down here. So intermediate C has to be a 5-wave structure. We've got an impulse for 1, and now possibly a double zigzag complete for 2. And if that's the case, if it's over there, then we would be looking at minor wave 3 up in its very early stages. For the start of a third wave, this candlestick today really is completely unconvincing. And so I do have another scenario which allows for minor 2 to continue lower. We'll see that at the hourly chart level. This labelling for minor 2 can complete here as a double zigzag has a different way of treating this piece of movement from the second scenario, which we'll get to when we see the second wave count. If it's a double zigzag, we have a 5, 3, 5 first zigzag in the double, joined by a brief and shallow X wave in the opposite direction. This looks really typical for an X wave within a double zigzag. And then we could have another 5, 3, 5 second zigzag in the double could have been over here, so that minor 2 falls just a little short of the 0.618 Fibonacci ratio of minor wave 1. Let's take a look at this idea at the hourly chart level, where minuet wave A down here is this point here. Just very quickly, the problem I had with bar charts data for these sessions back here has been resolved in that price is now behaving normally, the bug is fixed, but for this data back here it's still wrong. I'm not really going to worry about that too much. I've had a look at P and bull data. It subdivides as some kind of combination or flat correction I expect, and at this stage, now that the data problem is fixed, it really doesn't matter what structure minuet wave B was. It was a B wave, and the important point to note is it was over here, and the duration, which can't be changed by the candlestick wicks, the duration of minuet wave B looks in proportion to the duration of minuet waves A. So the question for this wave count is whether or not minuet wave C is over. If it isn't, then we could have 1, 2, and then we'll need 3, 4, 5 on the way down to the target. The target expects the most common Fibonacci ratio, one of equality, between minuet waves C and A, and that's not too far below the 0.618 Fibonacci ratio. You can see that at the daily chart level. Minuet C has to be a 5-wave structure, so we may have 1, 2, this wave count, we would now be expecting an increase in downward momentum for a low degree third wave. If subminuet 2 continues any higher, it can't move beyond the start of 1, above 1289.67. This pink channel is the same as if I have drawn it on the daily chart. I've copied it over here to the hourly chart, and so far for this bar chart data, price remains well within the channel. We don't even have a channel breach. Let's have a look at a second scenario where it's all the same to this point here, where the end of minuet B is this point here, and now I've just moved the degree of labelling within minuet C up 1 degree, so it's entirely possible that minor wave 2 could be over. This follows the labelling at the daily chart level. If minor 2 is over here, then minor wave 3 is beginning, and the first wave within it would be incomplete. For minute wave 1, minor 3 must be an impulse. That's the only allowable structure for a third wave. So when minute wave 1 is complete, we'll then expect a deep correction for minute 2. Not there yet. So far, this upward movement could fit as a leading expanding diagonal. For this scenario, I'd be expecting minuet 2 to be a deeper correction, because second waves following first wave leading diagonals are usually very deep. If we label it over down here as a zigzag, which is possible, then it would be just really close to the 0.618 Fibonacci ratio of minuet 1, and I would expect it to be deeper than that because it's following a leading diagonal in a first wave position. So when this is over, I'd expect an increase in upward momentum. This idea requires a new high above 1289.67 in order for us to have any confidence that we have at least an interim low for gold. That's the high of October the 7th, so whatever your data price point is, because I'm just a little suspicious considering that bar charts had a data bug, or a bug with their data back here. And so using whatever price point you get from your broker data, if we have a new high above that point, then this scenario would have some confidence. There is another scenario though that would also be entirely viable. Minuet 2 can't move beyond the start of 1 below 1268.42. Okay, now let's take a look at the second wave count. There are more than 23 possible corrective structures that B waves can take, and it's impossible usually until they're at or close to their end to have any reasonable level of confidence exactly which structure they've taken. And so it's absolutely essential when B waves are unfolding to be flexible, open-minded, and consider Elliott wave alternate counts. This wave count still sees a big 5-wave impulse over to the low in December 2015 in exactly the same way as the first wave count. After that, now we're looking at cycle B as a different structure. Here, possibly a regular contracting or a regular barrier triangle. A triangle, an Elliott wave triangle, has 5 subwaves. 4 of the 5 subwaves have to be single zigzags or a multiple zigzag. Only one can be the more complicated multiple, which means one of the 5 triangle subwaves can be a different simple ABC structure, maybe a flat correction, although in reality that's actually not very common. They're almost always zigzags. And so we've got a zigzag up here for primary A, a zigzag down here for primary D, a double zigzag up here for primary C. That's the most common triangle subwave to be the more complicated multiple. So far, this fits with most common triangle behaviour. And then we'd need a single zigzag down for D, and then a single zigzag up for E, which would most likely fall short of the AC trend line and can't move beyond the end of C above 1357.09. This wave count resolves a couple of problems that I outlined that the first wave count did. Now we've got no problem with the depth of this downward movement for a B wave of a triangle. That looks absolutely normal. Now we've resolved the problem of a double flat in here, which I consider a very rare Elliott wave structure. If this is a double zigzag, we've got a 5, 3, 5. So we've got a zigzag here for intermediate W, a regular flat correction for intermediate X, and a zigzag here for intermediate Y. And so by resolving those two problems, this wave count must necessarily have a higher probability in terms of Elliott wave, that is, than the first wave count. The only problem I can see now for this wave count is the AC trend line does not have a very strong slope. Triangle trend lines usually converge more quickly than that, and so the AC trend line usually has a steeper slope. Now that's just a judgment based on years of experience. There is no violation of any Elliott wave rule, not even a guideline here. This wave count actually has a really good fit. In order for the triangle trend lines to converge with reasonable speed, it would be most likely that D should end around about somewhere down here. So there are two possible triangle types that could be unfolding here, a contracting or a barrier type. For a contracting type, primary D can't move beyond the end of B below 1123.08. For a barrier triangle, D should end about the same level as B. It can in practice move slightly below B. The rule for that is the BD trend line should be essentially flat to the eye. Unfortunately, that's the only Elliott wave rule which is not black and white. It's a sole exception, and it involves an area of grey or subjectivity. I think if this wave count's correct though, in order for these triangles to converge with reasonable speed and have a normal look for a triangle, it's not going to get too close to that point. Okay, let's take a look at the daily chart now, where the high labelled primary C is this point up here. And so primary wave D should be a 3-wave zigzag. So far I'm going to label intermediate wave A complete, but I may in the next week or two, if this wave count continues to have the best look, I might move this labelling here all up 1 degree. It's also possible that intermediate A could be over here. We could be looking at a big expanded flat for intermediate B, and then we'll just have a 5 down for intermediate C. At this stage, it makes absolutely no difference to the target expectation, the invalidation point, or the expected direction next. It's just a degree of labelling that will need to be resolved in the next couple of weeks or so. So I'm keeping an open mind at this stage about what degree to label this movement so far. From this high to this low, I'm treating this downward movement a little bit differently, and the difference is in here. If we have a 5-wave structure complete down here, we could have a first or A wave, a second or B wave, and in order to see this as a completed 5 and not a 3, which the first wave count sees it as, I see the correction not over here but here. At the hourly chart level, this minute wave 2 will certainly fit very nicely indeed as a double combination, and so the proportion between 2 and 4 here is still pretty good. This wave count actually has a pretty good look. If minor wave 1 was over here, then minor wave 2 is unfolding, and it may be an expanded flat correction. They are very, very common structures. They subdivide 3, 3, 5. The B waves of flat corrections are most commonly 1 to 1.38 times the length of the A wave. The B wave of an expanded flat has a minimum 1.05 times the length of the A wave. This B wave is 1.8 times the length of the A wave. That's within the allowable convention of up to 2. It's just longer than the most common length. That's okay. I've seen quite a few expanded flats that do have reasonably long B waves. When the B wave is longer than 1.618 times the length of the A wave, then the appropriate Fibonacci ratio to apply to calculate a target for the C wave is 2.618, so that's what I've done. And that gives us a figure just $4 above the 0.618 Fibonacci ratio of minor wave 1. So I've got a $4 target zone for an upward bounce to last at least another week, maybe a little bit longer, up to 1330 to 1334, and that would complete the expanded flat correction. For minute wave C, it would be very, very likely to make at least a slight new high above minute wave A here to avoid a truncation and a very rare running flat. Minor wave 2 may not move beyond the start of 1 above 1357.09, and if we increase the degree of labelling here and label this intermediate wave A and B, the rule is exactly the same. Intermediate B, if this is unfolding, can't move beyond the start of intermediate A above 1357.09. The target range I've got at this stage for primary wave D to end is to see it from 0.8 to 0.85 the length of primary wave C. In my experience over the years with triangles, that seems to be a pretty common length for triangle subwaves to reach. So that would give the BD trend line a reasonable slope and would see primary D a really normal length in relation to the previous triangle subwave labelled primary C. Let's take a look at how this might be unfolding at the hourly chart level, where the end of minor wave 1 will be just off to the left of the chart and the high of minute A will be also just off to the left of the chart. So I'm actually showing you this piece of movement. So from this low to this high here. So here, the end of minute wave B, a 1.8 length to minute wave A, and the start of minute wave C. Minute wave C has to be a 5-wave structure. It's most likely to be an impulse. It could also be an ending diagonal. That's less common. Let's assume the most common structure, an impulse, until we start to see lots of choppy overlapping and upward movement, and then we need to consider an ending diagonal for minute C. So far we could have a leading diagonal for a first wave, and now be looking at a deep second wave correction to follow it, and then a third wave up to show some increase in momentum. But again, we really do need to see a new high above 1289.67, that's the high for the 2nd of October, before we can have any reasonable confidence that we have at least an interim low for gold. If that happens, then this would be my preferred target, 1330 to 1334. And again, this data from bar chart's still wrong. It looks like they're not going to fix that retrospectively. Okay, let's take a look now at some classic analysis and see which of those scenarios, if any, has more support from classic analysis. At the end of last week, now this weekly chart does not include the unfolding week, and I won't want to start analysing that until that week's finished. You really can't start to analyse it when it's not complete. So for these 3 downward weeks, we have some increase in volume. So last week was actually pretty bearish, had a long upper wick, more downward movement, lower lows, lower highs, and a nice increase in volume. So that tells us to expect most likely more downward movement, and that is how this current week started, and so that's okay. Last week, on balance volume was giving a very weak bearish signal, but I wanted to see on balance volume move a little bit further below this line in order for that signal to be clearer, so I was only going to give it a little bit of weight. ADX was essentially flat or slightly declining, indicating a consolidation at the weekly chart level, and ATR remains very, very low, showing a little bit of an uptick for the last few weeks, but overall, for many, many months now, it's been steadily declining. Now that actually offers quite a lot of support to the second weekly Elliott wave count that sees a triangle unfolding. This is exactly the kind of decline in range you would expect to see as a triangle moves past its middle. RSI neutral, plenty of room for price to rise or fall. So for the short term, this weekly chart expects a little bit more downward movement, and that's how the next week, this current week, started off, and we may be getting a little bounce here. Let's have a look at the short-term picture and see which of those scenarios has more support. The last session completes upward movement, a high, 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 low. The candlestick closes green. It's got a really long upper wick though. The balance of volume was up, and we see some support from volume today for upward movement. So it looks like we don't have upward movement complete yet. I would expect, because of the support from volume, to see at least a little bit more upward movement. But price is finding some pretty strong resistance about 1285. So if it can break above 1285, look out for a strong zone of resistance about 1305 to 1310. On balance, volume it's got a little way to go before it's going to find some resistance. It gave us a bearish signal with a break below support here. It may now be moving up to test resistance at this trend line. This trend line has some reasonable technical significance because it's been tested many times, but it's got a fair slope. It's also reasonably long held, so we take that bearish signal seriously. That really would offer a little bit more support to the second Elliott wave count than the first. If we find resistance at this yellow line, then that could be where the expanded flat ends, so I'll be watching on balance volume carefully. When it gets up to either of these lines at resistance, that may serve to halt a rise in price. At the last low, RSI didn't actually reach oversold, and there wasn't any divergence with price and stochastics, so both of those together look like we haven't got a full low in place yet for gold. There is still further room for price to fall. Stochastics can remain oversold for quite a reasonable period of time. It's only when it's been oversold for a while and then exhibits clear divergence with price, and preferably multiple divergence with price, but single is okay, like we saw here. Once it does that, then it can assist to tell us when we may have a trend change. It's actually not particularly useful as a timing tool. As price is falling for the last few days, ATR is now declining. That indicates some weakness in downward movement. MACD bearish, and I've just got this correlation coefficient here with gold in the S&P because people keep asking me about my S&P analysis, and I just want to show the two markets just are not correlated. So overall, I think this chart offers a little bit more support for the second Elliott wave count and that hourly wave count, which expects the bounce to continue up maybe to about 1305 to 1310 and then to turn back down, and we'll be looking for support, next support about 1260. That's all from me with your extra video update from Hong Kong, and I hope that all of our members are having a fabulous day.